Hey everybody, we are officially about 4 days away from Christmas, at least at the time of this recording. So I really sincerely hope that all of your presents are nestled safely under the tree and wrapped. And if they're not, I really hope that you have free 2 day shipping because you got some work to do. Okay, let's talk a little bit about market volatility. We continue to see volatility almost until the end of the year now. It's gone on basically since the midterm election, which is not uncommon. I'd say if you look at past midterms in October, you pretty much have market volatility every time. But why has this season of volatility continued? Well, we've got other things happening like rising interest rates and basically the threat of continued interest rates going up. The Fed has already said they're going to continue to raise those rates into 2019. So that's going to be coming down the pike for sure. Fear of inflation. We do have great fundamentals in the market, or in our economy, I should say, right now. We have record low unemployment. We have record growth of GDP. We have record growth of jobs. We actually have more jobs in this country than there are people to fill those jobs, which is actually a good problem to have. Other things going on are Brexit, okay, over in Europe, and that may or may not be happening, but it's pretty turbulent over there right now, and that's definitely affecting the decisions that investors are making in our economy here. Then you've got the China trade war that has been going on, and tariffs, and so I mean you get the sense that there's kind of a lot going on right now. And so it's not just one thing that we can point to and say this is what's causing all these negatives in the market, but it's kind of a lot. So I think those are the main factors that we need to remember are happening kind of on a greater scale. And then for our accounts, we need to stay focused on what things are important. 99% of the people that I'm talking to right now are long-term investors. Okay, that means that you don't need the money tomorrow, so you don't need to worry about selling out of your positions anytime soon. You're going to have to just ride out this storm. And there's been many storms like it in the past, okay? Actually, on average, a 10% correction, which is about what happened in October, where the market goes down about 10%, that's actually not uncommon. It statistically, on average, will happen once a year. And even a 15% correction is normal every couple of years, and a 20% every 3 years. So these are things that just the market goes up, the market goes down, and we just have to ride out the storm. So making sure your portfolio is diversified, making sure that you have the right allocation for time horizon. That means like how long you need the money or how long you have to invest until you need it. So if you have a long period of time, then you can afford to be a little bit more aggressive. If it's a short period, then you should scale back and be a little more conservative. Okay, and the last thing I'd say, if you have not talked to your advisor, you should definitely be talking to them. You should be meeting with your advisor at least a couple times a year, I'd say, if it's just even like a phone call. If your advisor is too busy for that, then maybe you should, find a new one. And I can certainly give you a recommendation for that. But that's all I wanted to say about the market volatility. Last thing, Merry Christmas, and God bless you and your families as you come into 2019. Let us continue to remember the goodness of the Lord and the ways that He has blessed us and been faithful to us, and remembering that He's going to continue to be good to us in 2019. Looking forward to all the good things coming down the pike, and I'll see you for my next video in January. Take care.